AMC TV 18, celebrating 15 years of leadership.
We continue our conversation with our Alpha Manager, Mahesh Patil, Co-Chief Investment Officer at Birla Sun Life AMC. Mahesh, you spoke about infrastructure and manufacturing before we went into the commercial break. When we come back, I want to talk to you about financials. It's been sort of your biggest overweight, so to speak. Will you continue to stay overweight on financials through the course of the year? Do you think much of the gains have already come in? And I think Nigel was asking you in the break about, PSU banks and whether your outlook towards them is likely to change, because right now you're skewed more towards private sector banks.
So financials, we have been pretty overweight for the better part of last calendar year. I think we also launched a fund 1 year back in the banking and financial, because our belief was that at the bottom of the economic cycle and things like to pick up, this is a sector which does well in the initial part of the rally, and it's played out pretty well because it's a broad proxy to the economy. And especially we have seen the private sector banks in India especially, despite the market cycles, have been more compounding stories. They've been able to take market share from PSU banks. So our overweight has always been on private sector banks. More it was in the retail banks, But the last 1 year, we've also taken exposure to banks more exposed to the corporate side, because we believe that some of the stress which was in large corporate, I think we've seen some deleveraging over there. I think to a large extent, I think the re-rating on the banking sector has happened. I think no longer the price to book value multiples are as cheap as they were 1 year back. So now I think it will be again banks which are able to really capitalize and grow, their earnings and have a better product mix. I think they would continue to do well.
So in your assessment, which ones would those be?
I think some of the banks, especially on the retail part of the thing, will continue to do well. And also on the corporate side, focus on the small and medium enterprises. Those can do well as the economic cycle recovers.
PSU
and on PSU banks, we've initially were quite underweight. We have corrected that. We are more or less neutral now. I think as the economy picks up, as the NPA cycle has peaked out, and rate cuts, I think there is now greater interest to look at PSU banks. But there again, we are very selective, only at banks where we are comfortable with the leadership, and also banks which are well capitalized, because I think a lot of the PSU banks will still require equity infusion, and that would really weigh down, especially
when... Would SBI be top of the heap for you?
So in our portfolio, SBI is one of our top holdings in the PSU banking space.
All right, then Mahesh, let's talk about the IT space, moving away from the financials. I believe that there's not much exposure on that end. What exactly is exposure? Do you think that some of those stocks will do well going ahead as well?
So the IT sector, we've seen last year was a pretty good year, for the IT sector. Going forward, I think looking at the budgets for this year, things looks to be okay. I think probably would be a tad lower in terms of overall dollar revenue growth than what we saw last year. But I think IT sector should do steady. I mean, there's no spectacular surprise negative on the positive side, at least in terms of the dollar growth. I think the cross-currency movement is something which can impact some of these companies which we saw in the last quarter. And I think that's something which might continue in for the next couple of quarters also. But broadly, I think we expect IT sector should be in line. And that's why our exposure to the IT sector is neutral. We aren't too negative on that space.
But I see only Infosys, HCL Tech, Tech Mahindra in some of your top 10 holdings, not TCS.
So I think we've been, at various points in time, depending on the valuations and growth, I think we would change our weightage. But I think we would have a fair allocation across some of the larger names. But we have actually played to prefer some of the mid-sized companies, where we believe that the growth could be better than the industry and where the valuations are reasonable. So I think we always have a spectrum or growth
basically TCS
and valuations.
Is overvalued.
So TCS is also one of our decent holdings, but relatively, compared to the benchmark, probably it would be slightly lower.
ITC features prominently in some of your top 10. What's your outlook on that company, if you can talk us through that? And, I'll connect that to the fact that consumer staples is an area that you are underweight in. So I'm sort of leaving out the cigarette business and, looking at some of the other FMCG-related businesses in ITC.
Yeah, so I think in the consumer space, we've seen a lot of stocks where the valuations continue to remain pretty high. We have seen some kind of a slowdown in terms of volume growth if you look at the last quarterly numbers. But I think India consumer will be a long-term secular story. So it is a kind of stocks which normally you wouldn't see much of a correction. If at all, there could be a time correction. So I think selectively on ITCs, particularly, I think again stock has underperformed because of the government controls on the expectation. And normally going ahead into the budget, okay, we see some kind of other thing, but I think on a valuation framework, I think it still looks.
What would you need to see for you to become a little bit more positive, or sort of adjust your weightage on consumer staples? A better volume number, is it, across the board?
Yeah, I think that's the bottom line over there. I think the volume numbers picking up. You might see this couple of quarters, I think margins could actually be better. And
so it's interesting because Adi Ghosh was telling me, he says he saw volumes already picking up in the second half. Of course, this depends on what brands you have, which parts of the market you cater to,
etc. Yeah, more rural.
But he said rural and urban volumes have been picking up in the second half of this year. And he's seeing visible signs of a pickup already. So, is this the right time to start getting into consumer staples, or you'd wait for a little bit more evidence?
So again, I think volumes, as I mentioned, if consumer confidence coming back, you should see spending, and especially at the higher end of the chain. Okay, we have seen some down trading happening in the consumer in the last 1 or 2 years. So I think that's where I think you could see a better growth. And I think more the urban demand, I think our theme is that rural consumption, I think, would see some kind of a slowdown. Okay, we have seen rural wage inflation at almost 5-year low. We have seen MSP increases have been in single digits. So that was a big driver for rural economy in the last 3-4 years. So that will, so I think urban economy will come back. So I think companies which are positioned more on the urban side, I think there you could see a better volume surprise in the next few quarters.
Okay, we're almost at the end of our time, Mahesh. I want to ask you, about what you think of what the expectations from the budget are. I also want to ask you about this year in investing. How difficult is it going to be vis-a-vis last year, and what some of your best bottom-up picks are, since that's your sort of articulated strategy for 2015?
Yeah, so I think on the budget, I think the budget has to some extent lost its. People give a lot of weightage to the budget, but I think a lot of things the government is doing outside that. So I think one should not really. I think budget would be a direction, okay, where the government focus will be in the next few years, and also in terms of fiscal consolidation, okay, how they're trying to really balance fiscal deficit as well as growth. So I think one will look at what's the government spending is going to be, because I think that's going to be critical for revival, because I think private sector investment will still take some time. So that's one thing. And I think the focus, whether what they've been saying and the budget is really articulate, putting that numbers to some of those things, whether it's in the thrust on the investment side or reviving the whole manufacturing sector. So what are the kind of incentives which are given, okay, for that? That's something which I think one would look out for. And in terms of
investing in 2015?
Yeah, I think this year would be, I think last year was a play where a lot of themes played out. So whether it was the financials or some of the other sectors, and it was more top-down, I would say. I think going forward it will be more bottom-up, because what I mean is that you'll have to really look at companies where earnings growth, okay, would now be necessary to drive out performance. I think to a large extent the hope and expectation that we've seen re-rating happening without any change in earnings last year. And last year also was a year where a lot of fund managers generated a lot of alpha. If you look at the alpha in last year, on an average would be around 10% or more, compared to an average of around 3-4% over the last 5 years. I think that would be more stock specific. So I think it will be more important to be connected in terms of the companies one is investing into, in terms of where the earnings delta change would be, to really drive out performance. So I think that's what I mean in terms of more of bottom-up stock picking.
All right, Mahesh, we'll leave it there. Thank you very much for joining us. That's our Alpha Manager of the Day, Mahesh Patil of Birla Sun Life.
CNBC TV 18, celebrating 15 years of leadership.